The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. And boy, quite a reaction from NVIDIA last night. Let's get right into it. You got markets in positive territory. S&Ps right now up by about 35 points. That's about 2/3% to the positive. We're trading right now at 53.63. You're talking about opening in record territory. Quite the number. NASDAQ 100. How about 19,000 on the dot as we speak? That is going to be a record open for the NASDAQ 100. We're up by 1.14% right now. 214 points in the positive. The Dow up by 65 points. You could say underperforming, but not too surprising when you got tech stocks with AI and NVIDIA charging higher in dramatic fashion. Excuse me. And we got the Russell up by 7 this morning, trading at 2,096. We jump over to Bitcoin. Just at about 70,000, 69,665. Crude, quite a little deceleration in crude. Going to be interesting to see what happens in this crude market, man. Crude trading at 78.46. We're positive on the session. You're up by 88 pennies right now. But you see the slide from where we were just about 6 weeks ago, inching towards $90. Right now we're at 78.45. You jump over to the gold contract. Gold trading down for the second day off $24 at 23.68 right now. And you jump over to notes and bonds. We got the 10-year right now basically flat at 109.01. You got the 30-year right now up 3 ticks at 117.12. And let's jump over to the dollar index this morning. DXY, 104.66 right now, down 26 pennies. And we jump over to NVIDIA shares. And yeah, they beat basically everywhere. Now, did they beat by enough? The market's saying they did so far. We'll find out when the market opens where supply equals demand. But you talk about quite an acceleration. Well over the $1,000 mark right now. We're trading just off of the highs. We hit 1,023 last night. We're trading at 1,013 right now. That's up about $63 from where we were last night, and that is going to be record territory for NVIDIA. Yeah, to say the least, right? Okay. Let's jump over to their numbers, and we'll kick it off. Stock surges as sales forecast delivers on AI hopes. The CEO, of course, talking things up. We are poised for the next wave of growth. Next wave of growth, man. Are we still done with the last? Are we done with the last wave of growth? Second quarter revenue for the forecast, $28 billion. That's topped the 26.8 that the market was looking for. Now, it is remarkable when you think about the acceleration that they've already had, right? They're beating numbers that are just mammoth numbers from where they've come from, even recently. NVIDIA is going to add about $173 billion to their market cap. That is greater than the entire market capitalization of Intel. That's what they're going to add overnight. Their $28 billion in projected quarterly sales is going to be more than twice what Intel is expected to report. Right? Pretty remarkable. And there's your acceleration. Let's blow it up. This is quarterly sales in revenue, okay? And yeah, so you're talking about quarterly sales has overtaken recent annual totals. It's been a ramp up to dramatic fashion, and it's happened in the last basically year, right? As this thing's blown up on AI, ChatGPT, etc. Now, can this continue at this pace? That's the question that you got to ask yourself. Now, this is the revenue in millions. So you're talking about a billion number. That's 25, that's 26. I think they just come in at 26 billion, something like that for quarterly revenue. You back it up to 5 quarters ago and they were at what, 7 billion, something like that for quarterly revenue. So now they're pushing 26. And you saw the number that they're going to come in with, which is the forecast is going to be 28 billion projected quarterly sales. Okay. So that number is going to jump to about 28 on the next number. It is interesting to think about. Can they really keep up this type of trajectory? I mean, you're talking about a company right now that's going to be valued at about $2.5 trillion. Expectations pretty high. NVIDIA's revenue at about $26 billion. Profit, $6.12 a share. Analysts were looking for 24.7 on profit of $5.65. And Yeah. This is interesting. 40% of their sales, we know this, but Amazon, Meta, Microsoft, and Alphabet, 40% of the sales go into those 4 companies alone. Now, if you want to have good customers and you get to pick them, man, those would be 4 good customers to pick in terms of having cash flow, in terms of needing to grow, especially in this sector. Amazon, Meta, Microsoft, and Alphabet all plowing money into AI in the future, of course. But they're trying to spread their bets by producing complete computers, software, services aimed at helping more corporations and government agencies deploy their own AI systems. The data center division, $22.6 billion. It was interesting. If you look at gaming chips, they had a slight miss. I think they were supposed to come in at 2.62 or something. They come in at 2.6. I mean, that's not where the valuation of this company comes from right now. Analysts had given a target of $21 billion for the data center. That's where they beat. They come in on gaming. I was talking to my dad last night and saying, this is pretty interesting, right? That they've been at the forefront of computing even before AI. And it's remarkable that somehow the market wasn't paying attention to say, hey, when it was about gaming chips, it was all about NVIDIA. When it was about Bitcoin mining, it was all about NVIDIA. And it seemed like it's been a constant basis that if you need the highest computing power, and first that was for gaming, then it was for Bitcoin, now it's for AI. But where was the market saying, you know what? Eventually it's going to matter in greater proportions than just kids playing games on computers and mining Bitcoin. They've been at the forefront. And how did it take this long for the market to catch up to the fact that, hey, when it comes to computing power, NVIDIA has been the powerhouse, and now it's for AI. But I think the market, you'd always want to say they've realized the potential there, but have they? Because we keep trading higher, and we'll see. The company's new chip platform called Blackwell is now in full production, and it lays the groundwork for generative AI that can handle trillions of parameters. We're poised for our next wave of growth. Yeah. Right. Hyperscalers remained a critical growth driver for NVIDIA last quarter. They generated approximately 45% of the company's data center revenue. NVIDIA is in the early stages of diversifying their business. Yeah, they're in the very early stages of diversifying their business when they got 40% of their business coming from just 4 companies. Now, margins. All right, let me find this number. And I'm jumping around. I think they're at something. Yeah, check this out, okay? This is the NVIDIA press release. 78.4% is where they think they're going to be in Q1 fiscal year 25. 78.4%. That's bonkers, man. And it makes sense because the amount of money that they're charging versus what it actually costs, even with the money that they're putting out, revenue, gross margin, 78.4%. And that's where they're looking at for Q1 of fiscal year 2025. And this is right from NVIDIA News. And this is the press release that they put out just yesterday on their numbers. So they're putting the spin up there, of course, the best they can. But you talk about a number, man. Can't overstate the type of numbers that you're talking about there. Quarter over quarter, up by 2.4 points. Year over year, up by 13.8. It's just a remarkable number across the board. Yeah. Those numbers are expected to be 74.8 in terms of GAAP and non-GAAP gross margin, 74.8 to 75.5. Mammoth numbers when you're talking about the type of revenue you're talking about, and they're taking almost $4 out of $5 to the bottom line. And yeah, NVIDIA up by $65, going to open in record territory. Stay tuned, folks. We got a lot to talk about. We'll take a look at some of those other tech companies, Microsoft, Meta, Amazon, Google, as well as some others. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the morning market kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got markets in positive territory. We're about 11 minutes away from the opening bell. S&Ps right now, we pulled back just off those highs. We were at 53.68. This is a 15-minute chart we got going on. So 830 was the highs there, 53.68. We trade down to 53.60. Before we get to those tech companies, one other news item out there. Jobless claims out at 8:30 this morning. Back-to-back drop. The biggest back-to-back drop since September. And biggest back-to-back drop, all things in perspective here. We're talking about a decrease of 8,000 to 215,000. But boy, I don't know if that's going to trim inflation like the Fed is hoping for. 215,000 for weekly initial jobless claims, a pretty low number. Just basically a healthy churn in a economy that continues to march on. Now, this one from the Journal. Late last night, early this morning, 3 a.m. Eastern time, kind of giving a little bit of counter perspective here in terms of where NVIDIA is. Obviously, they're crushing it. The business is booming, to put it lightly. Here's what could slow it down. All right. Now, they're not arguing it will slow down, and I'm not arguing it's going to slow down either. But it is important to see the optimism that is priced in and the headwinds that they could begin facing as the market looks for an extreme amount of growth. Our man Kevin Hinks, he has a great saying, and it goes something like, and I'm going to surmise it, I won't get it exactly right, but at a certain price, I'll be a seller of any equity, and at a certain price, I'll be a buyer of any equity, right? As in, even the best stocks can become overbought, even the worst stocks can become oversold, okay? It's important to keep in mind, especially when you have runs like the one that NVIDIA is having, when you think about the type of growth that is priced into this equity going forward and the type of performance and delivery that they have to bring forward in order to rationalize that forward growth, okay, and market capitalization that they have right now. After tripling sales for 3 quarters, NVIDIA faces new competition in a shifting AI market. One of the things this article talks about is basically the ability to recoup what they're spending. Now, that's the hallmark of any business, right? You're spending money in the near term on the expectation that maybe that's going to pay future dividends in growth or whatever it is, okay? Despite the power and promise of AI, this talks about startups, not even the big companies. The big companies have to do it too, though, man. We saw what happened to Meta, right? When Zuckerberg got a little bit wild with his Meta capital expenditures in that company. He pulled it back a little bit, but they're buying beaucoup amounts of these chips as well. Startups are struggling to come up with a business model that can recoup the massive investment in hardware that technology requires. Sequoia Capital estimated in March that the industry, and this is just in March, we're almost 3 months later, think how much more money has been put in. The industry put $50 billion into NVIDIA chips to train large language models, but generative AI startups had only made $3 billion in revenue. Okay, that's going to have to equalize at some point in the future. And if it takes too long, you're going to see a scale back. Some AI startups that build products using NVIDIA's AI chips have run into turmoil, including Inflection AI. That was a NVIDIA-backed company that had its co-founder and other employees decamp from Microsoft in March. The chief executive of Stability AI, you got to love it. Just throw that name AI in your company name and it'll rock it, at least for now, which built the popular image generation AI tool Stable Diffusion. They left as well abruptly in March. Okay, AI companies big and small also are increasingly looking for ways to build and deploy smaller models that can be effective for specific tasks but don't require as much of the computational firepower that depends on NVIDIA chips. Depending on how those play out, other factors could help some of the NVIDIA gusto, as they put it. Now, the CEO is out there in an interview, of course, laying out ways that the company is positioning itself to grow despite challenges. Now, he's talking about moving beyond making chips into data centers, okay? This is not a chip business. You're building data centers, and if anybody's ever seen a data center, go take a look and imagine the unbelievable amount of technology that goes into building those things. True, 100% true. But where it also gets into, though, is competition to a certain degree. And when you're relying on the 4 biggest tech companies in the world besides yourself, because they are one of those big tech companies now as well, 40% of those sales, right, coming from the companies I just mentioned: Amazon, Meta, Microsoft, and Google, okay? NVIDIA's chip-making competitors are increasing their game, releasing their own AI chips, right? Apple's been doing this. Google, Amazon. That they have claimed are better, at least at some AI computing tasks. Now, they're all going to claim that. We'll see really who is better, because the best is going to rise to the top, as usual. They're also aiming to displace NVIDIA's dominance in software used to access the GPUs, responding to demand from customers who want alternatives, okay? NVIDIA's market share in AI chips is at 80%. Can they hold on to that? I don't know. We're going to get to find out, man. The current reliance on a single chip manufacturer limits customers' choice and can hinder innovation. That's one CEO out there of Samba Nova Systems, an AI chip startup that's competing. They have their own bias when they're competing with that company, of course. You have the AMD CEO said last month that her company expected about $4 billion in revenue from AI chips this year. Intel launched a new generation of AI chips in April. Okay. Big tech, I think it's almost more important to look at the companies that are really buying it, because Amazon, Google, Meta, Microsoft are opening another front against NVIDIA by designing their own chips and having them made by contract manufacturers. Google, which has been making its own AI chips for years, with Broadcom, unveiled a new generation of AI chips last month. You have Apple that's been making their own chips for their phones as well. Amazon announced a new AI chip in November, the same month as Microsoft. What did I just jump to? He said it would start making custom AI chips. I mean, when you're talking about the type of money that these companies are plowing in, yeah, it's not going to be easy. But when you think about that, they're going to have to do this in perpetuity. And I guarantee that those are the discussions they're having in the boardroom, right? They're saying, hold on, man, we're spending, I mean, I went over it yesterday. What was Zuckerberg buying? I think it was 350,000 of those H100 chips. Even at the lower end of $20,000 a chip, that's coming in at about $7 billion this year alone. They're going to have to upgrade it next year when they come out with the new chips. They're going to have to do it again. If you're spending $10 to $20 billion a year on just chips from one particular company, maybe it makes sense to plow 50 to 100 to 150 billion dollars to develop those yourself, if you're spending actually upwards of 10 to 20 billion dollars a year just on those chips. And so this is where you're going to face a little bit of headwind potentially as you come down the line on the expectations for growth for that company. So you have an analyst, Hans Mosesmann, an analyst at Rosenblatt Securities, said in a note that NVIDIA was expected to lose market share in the percentage of the world's AI chips that it makes because of the competitive pressure, but he said it was likely to maintain and even increase its overall share of AI computing landscape because it moves, because of moves it was making to grow its presence in other areas of computing and software. So that's going to be the interesting part. They're going to lose the dominance for the big players. They're going to go into different areas there. Is that going to be enough to make up for losing business with the four big companies that make up 40% of their sales right now? So we'll finish this conversation. We'll take a look, and we get to find out where they open on the market opening bell. We'll be right back, folks.
Tigers, you've seen his show, you've learned from his webinars, and now it's time to trade side by side with him. Join Larry Pesavento for the second month of his new service, Live Trading Fridays. Hosted in the Tiger's Den trading room on Discord, Larry has analyzed a number of commodities and indices, placed profitable trades, and explained his method. Whether you're new to trading or are a seasoned market veteran, trading side by side with a titan like Larry Pesavento will only enhance your game. Utilizing Fibonacci retracements and ABCD structures, Larry provides decades of insight into when to place trades, when to exit, when to ignore, and so much more. Learning is doing. So if you're serious about learning technical analysis and becoming profitable in this uncertain market, Live Trading Fridays is a must-have tool in your arsenal. Live Trading Fridays occur every second and fourth Friday of the month, so trading events for this month are May 10th and 24th. If you're serious about trading, we'll see you there. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com. Then hit Watch Tiger TV.
Welcome back, folks. We get stock markets open. You get the NASDAQ 100 up and even 1% on the dot. You get the S&Ps right now up about 0.5%. You see, pairing some of those gains, we get back about 13 points from that high of 53.68. We jump over to the stock of the day, NVIDIA. How about it? They actually trade higher. 1,025. Our man Basil Chapman. A nice round number, 1,025. You're up by 7.5%. And what was the expected move? About 8%. What are we up? about 8%. Pretty remarkable as they deliver. And yeah, John, what are we talking about, man? What kind of market cap are we hitting now? That's Tesla, excuse me. Now, they got a 10-for-1 stock split going on over there. Yeah, they're above 2.5 trillion. Absolutely remarkable, man. Where is Amazon, that conversation? Amazon's at 1.9. Microsoft is the big dog out there, of course, 3.2 trillion. You jump over to Apple shares, 2.9 trillion. You jump over to Google. I mean, it is remarkable, 2.2. You think about it, they're a bigger company than Google right now. They're a bigger company than Amazon right now. This is NVIDIA. Yeah, up by 7.2% right now. You're trading at 1,018, and so far for the first minute and 40 seconds of trading, at least they've held on to it. You got the Dow actually trading lower, though. Check out that drop from 39,880. We just gave up 140 points from where we were at about 8 a.m. this morning for the Dow. All right, back to a 5-minute chart, and let's check out some of those other tech companies. Amazon, they were higher. They gave it up a bit. You bounce on the open. They're up by about $1, up by 0.6%. Microsoft, of course, going to get a lift there. They give it up as well, though, a little bit. Up by $1.40, 0.3% to the positive. Meta shares this morning, up by 0.8%. You jump over to Google shares, up by about 0.8% as well. Some of those other chip companies, AMD, you're up by 2.7%. Intel shares down on the session, off about 0.25%. Pretty remarkable, right? All right, yeah. How about if you're in the market for instant coffee, go get some and stock up, man. Coffee, you talk about an acceleration. Vietnam crop seen at a 13-year low on dry weather. These commodities, man. Gold trading lower, commodities, but coffee, man. World heads for the 4th year of shortages for instant coffee beans, as that Vietnam crop at a 13-year low for dry weather. Higher prices needed to hit demand for beans and instant coffee. That's what's coming at you, man. The crop potential for Vietnam in the 2024-25 season, 24 million bags. The lowest in 13 years is what they're looking for. You got poor rainfall in Vietnam, has caused irreversible damage. It's going to be interesting here, man, as we see climate change going forward. I wonder what kind of volatility we're going to see on some of these types of commodities where just absolutely driven by rain, weather, etc., right? Poor rainfall in Vietnam has caused irreversible damage to coffee blossoms, while lower fertilizer use and the expansion of durian trees at the expense of the coffee acreage have also weighed on the production. Yeah, global Robusta deficit of 4.6 million bags, smaller than the 9 billion bag deficit seen in the previous season. Each bag of coffee, 60 kilos. Not bad. Supply tightness has fueled a Robusta rally this year. Futures trade in London surging to a fresh intraday high. $4,300 is where they were in April. Unwelcome news for coffee drinkers. Already paying more for their daily brew, the world is facing a shortage of the cheaper Robusta variety as El Nino weather conditions continue to harm crops in Southeast Asia. Yeah, everybody loves their coffee, man. Coffee's not going away, and you're going to see prices rise if that's the deal. Coffee prices for Robusta heavy product blends remain at a substantial discount to Arabica containing blends, and thereby consumers seeking value continue to choose the former for now. I'm not sure many consumers are that aware of that aspect when it comes to coffee, but maybe they will be, depending on what we hit a price, because guess what? Everybody has their price point. We've seen that with some of the inflation numbers going on. And with that in mind, we shift to the Fed. The Fed's inflation debate shifts to how much goods prices can drop. Now, this one out there this morning as well from Bloomberg. And yeah, you talk about the inflation debate. It's going to come roaring back. We've made it through the tech companies. Let's see how NVIDIA is trading as we check in. Stocks pairing things a bit. You got the Dow now down $100. And boy, NVIDIA trading up by 8.7%. But they're in a class of their own right now, man. NASDAQ 100 only up by 0.8, but look at the drop-off you just got, okay? NVIDIA is in a class of their own because guess what? There's only one NVIDIA right now. You know, it's not like a situation where you get Amazon or Microsoft beating on the cloud and they're all going to be making more money off the cloud because you got Azure, you got Amazon Web Services. No, there is only one NVIDIA. So, yes, they are translating. But when they're making money, they're actually making money off the expenditures of some of these other companies, not actually the profits. They are their own entity, and it's showing. You're up by 9.1% right now. Absolutely remarkable. The stock not even just slowing. I mean, you're $100 off of where you were yesterday. Yeah, $100 up from where you were yesterday, from 931. You know, I talked about it on the program yesterday. Maybe you could sell a call spread. No, we didn't do that in my newsletter. Couldn't pull the trigger. How could you do it? Even with that volatility, and thank goodness, kept my hands in my pockets. Because, yeah, how can you do it? You know, how do you go against that company? I would never short it right now, because how do you short it? You could start looking at potentially, okay, looking for flat action on that equity, because, you know, now you're up another 10%. What's going to happen as you trade into the 10-for-1 stock split? I don't know. Maybe that's what happens. Maybe you run up to the 10-for-1 stock split. That's going to put a bit in this equity as well, as you're going to go from $1,000 to $100. Very difficult to rationalize buying one share at $1,000. Maybe you can rationalize buying 10 shares at $100. Same exact thing, but for some reason, mentality plays into things, and it does. Nonetheless, so we're over NVIDIA. Now we're probably going to move back to the Fed. We got jobless claims, absolutely robust at 8:30 this morning. Pablo says we could get more, while others aren't so sure, okay? Talking about how much goods prices can drop this is. The trajectory depends in part on prices of used cars and apparel. Is that really what's going to define where we go with interest rates? Maybe. Lower prices for everything from apparel to used cars were a major driver of the faster than expected downdraft in inflation in the second half of last year. I mean, that's what started the whole Can you imagine we were talking about 6 to 7 cuts at one point this year? Yeah, things changed, man. And the slower pace of price decline since then has contributed to higher readings so far over the first several months of 2024. Now, core goods prices coming down but are still elevated. Okay, the scope of additional declines is increasingly central to the inflation debate. This is consumer price index, commodities, less food, and energy. You're talking about core. Okay, and yeah, when you look at that number, yes, we've come down. Okay, from February 2020, based at 100, we're sitting at 114 is the number there. Okay, they based it at February 2020 at 100. You see the run up. We have seen a decline. That peak occurring about a year ago at 116. So we've actually come down 2 percentage points on a core basis, okay? Supply chains, whether they've fully healed from the pandemic, has policymakers divided on the outlook, okay? You have Powell suggesting last week we could get more improvement and thus lower prices. Some of his colleagues seem a little bit more skeptical. The real wild card outlook is on the good side of the equation. This is the U.S. chief economist at BMO Capital, Scott Anderson. It will continue to keep the Fed cautious. We'll finish this conversation when we go up. But we're talking about car prices here, okay? We're talking about supply chain pressures normalizing. Look at that number, well below zero. We'll talk about this because, yeah, the focus is going to come back to the Fed. We'll see where we are. We're almost into June. Are we going to get some rate cuts? We'll find out. Stay tuned, folks. We'll be right back.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. NVIDIA hits a high of 1,041. We're still up by 8.6%, trading at 1,031. I imagine the volatility is not done with that equity for the day. We'll see where we go. NASDAQ 100, though, you talk about pairing the gains, right? You're up by 0.7% right now. We just gave up 110 points right now from where we were in the pre-market. So you're up 126, but that's almost half the gain from where we were. You're now back to where we were last night at about 11 p.m. Eastern time, continuing to drop. We check in on some of those other Magnificent 7 stocks. Amazon dips into the red from almost 185 to 182.81. Microsoft shares, they give it up from 434.69 to 431.47. They trade down $3 from their pre-market high. You jump over to Google shares, they're still positive by about 0.75%. Apple shares right now in the negative. Look at that drop from 191.50 to 189.89 for Apple as well. Keep an eye on some of those other chip stocks. AMD up by 3.5, and Intel, the dog, check it out, down 1.5% for Intel. All right. Going back to that Fed conversation, there's one point that I want to get to here. So we talk about that potentially some economists see a possibility for more supply side improvements. This is the New York Fed Global Supply Chain Pressure Index. You see it, supply chain pressure is easing, to put it lightly, okay? Now, prices for household furnishings have reliably fallen for the past year, unwinding the rapid increases during the pandemic when consumers invested heavily in home renovations. In those times when demand was high and supply was strained, logistics often failed. Those are now easing, okay? Still, many on Wall Street are optimistic that core goods prices can continue moving lower in the months ahead amid ongoing improvements on the supply side of the economy and moderating demand pressures. CPI has now come down 1.6% from peaking in May 2023, still up 14.3% since February of 2020. Now, here's what's interesting, though, that I found. You have a Morgan Stanley economist here. This is the part I want to get to. Morgan Stanley economists, led by Ellen Zentner, have zeroed in on just 3 categories responsible for the recent slowing in goods deflation in the Fed's preferred inflation gauge: personal consumption expenditures price index, apparel, videotapes, and computer software. They noted strengthening supply chains and the deflation in China were reasons to expect prices to drop further. There's no evidence of broad acceleration, and the story looks more like a temporary adjustment of relative prices. We think core goods will continue to exert disinflationary momentum through the summer, serving as the key driver of disinflation, and that's what's going to matter, core goods. But the force will begin to wane thereafter. For disinflation to continue, housing and core services, ex-housing, have to pick up the baton because year over year, core goods inflation will likely be adding to inflation in 2025, given the low base effects of this year. So what's going to happen? You know the Fed's watching this. So you're going to have core goods inflation going to be so low this year that by the time you get into next year, it's going to be adding to inflation. So then other areas are going to have to pick that up. I don't know. There's a lot to happen, man. And I don't know how that happens if you really begin a cutting cycle to any degree. Because what's going to happen across the board there is that's going to put a bid under everything. And it's going to put a bid when we talk about, now, they always talk about core, but if you start seeing CPI numbers on a headline basis get hot again, that's going to be a problem. Because as I bring up, I was talking to Jacob earlier this week saying, I mean, if you recall, folks, if you get a chance, go watch the Chairman Powell interview on 60 Minutes many months ago at this point, probably like 3 months, 4 months ago at this point. The phrase that I want you to focus in on is we need to get back to the time when nobody was talking about inflation, okay? So even though they're focused on that core aspect, if you start seeing CPI run hot and you start seeing housing prices accelerate again, which causes rent to accelerate, et cetera, that's going to be a problem. And they're going to be on top of it, man. So we'll see where core goes, but it's going to be remarkable when you go years forward because maybe we get one cut, okay? But you think we're going to get more than that? You think we're going to get many than that? I don't know. We got a long way to go. All right. Keeping with the AI. How about News Corp? How about $250 million is what they're going to get paid by OpenAI? Wall Street Journal owner News Corp striking a content deal valued at over $250 million. The pact acknowledges there's a premium for premium journalism. Now, that's their own CEO talking up their own journalism, calling it premium for premium. But nonetheless, yeah, $250 million. It's over 5 years. So what's that, $50 million a year? A drop in the bucket when you think about where they are right now. But yeah, including compensation in the form of cash and credits. You gotta love that, right? A barter deal to some capacity. Credits for use of OpenAI technology, according to people familiar with the situation. OpenAI would use content from News Corp's consumer-facing news publications. Okay, so they're talking about articles that consumers are driving. This article in particular. Think about it. OpenAI is going to pay News Corp for their journalism. And then they write an article about that OpenAI is going to be able to use in that capacity. It's quite a cycle. But nonetheless, it's important, man, as these companies are all going to be pulling data. And where's that data come from? And do they have a right to that data? I mean, one of the things that OpenAI really needs to hit is they need to start hitting the point where they are current up to the minute. When they start doing that, man, think about the market capabilities of something like that, right? I mean, think about when AI starts hitting and you can start using ChatGPT 5, and I don't even know if that exists, I'm sure it's in the works. But yeah, I want to be able to talk to a AI bot about live market data that is up to the second, okay? And that is what's going to be coming eventually, man. The pact acknowledges that there is a premium for premium journalism. That's their CEO. The digital age has been characterized by the dominance of distributors, often at the expense of creators, and many media companies have been swept away by a remorseless technological ride. Cue the nod to Facebook in there. The onus is now on us to make the most of this providential opportunity. And yeah, News Corp trading higher, of course, on that. And yeah, we'll see where it goes. But they're going to probably have to pay for that. And I'm sure there'll be some lawsuits that go into it as well. We'll find out. All right, what else we got going on, folks? Live Trading Fridays with our man Larry Pesavento. If you haven't checked it out yet, folks, it's happening tomorrow morning. Now, there's 2 a month, but you can sign up at any time. Okay, so yes, the 2 this month, May 10th, May 24th. But if you sign up right now, you're signing up for a monthly recurring product. Okay, you're still going to get 2 when you sign up. You're just signing up in the middle of the 2nd and the 1st. So right now you got May 24th, you got this Friday, and then it looks like next month is probably going to be the 14th and the 28th. It's the 2nd and 4th Fridays. So you sign up for the 24th. That's when your recurring charge will run. And yeah, you're going to get this one. You're going to get the one on the 14th. And then if you decide to stay, you're going to get them from thereafter. You can cancel at any time like any product. So you sign up, you get at least a couple courses in there. If you decide you like it, you stay on. But this one happening tomorrow at 9 a.m. It's right in the Tiger's Den. We've had some great classes. Larry does a great job. He's in there for 3 hours. These are all archived. So if you're in there for 3 hours, you don't get to watch it all. Maybe you want to go over some of the trades that he made over the weekend. You can do all that. They will be archived right on your members page. Check it out tomorrow morning, 9 a.m. He'll be in there with his subscribers for Live Trading Fridays with our man Larry Pesavento. I always try and check that out after the program, and he'll be in there. So check it out, 9 in the morning tomorrow, Live Trading Fridays with Larry. You can't beat it, man. $295, and you can save $50 with the code Larry Live. This is the last month to do that, so don't miss that. Stay tuned, folks. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. You got Live Nation out here. You talk about a rebound. You were down to $91. The Justice Department filing maybe to spin off Ticketmaster, and yeah, they are a complete monopoly, man. It is an absolute farce how much money gets taken out of the music industry and driven into fees for this company alone. And what are we talking about? How big of a company is this Live Nation? Yeah, $23 billion company just by somehow creating a middleman to sell tickets. And when you think about it with technology where it is now, right? Anyway, get off my soapbox. But yeah, it's a complete monopoly. It's a joke that they were able to somehow Ticketmaster The agency, so this one here talks about the Justice Department preparing a Ticketmaster antitrust lawsuit. That was in April, okay? The news out there that Bloomberg reporting the Department of Justice and a group of states were expected to file a lawsuit against the company in the Southern District of New York today for antitrust violations related to Ticketmaster's domination of concert ticket sales. I would agree. It's just stupid, for lack of a better term, in terms of the fees that are associated with many tickets now. And they're the only one that you go to. And that's the bottom line. They have a complete dominance over that. And yeah. And so, but boy, you talk about a rebound. I guess the market isn't that worried after all. You're only down 1.6%. Let's take a little bit of a longer term look at that thing. Yeah. And look at that's when the deal got done. 2010, I think. And look at this thing. Right? And who's been hurt? Consumers. Quite a bummer. Live music, live sports, live entertainment. Nothing like it, man. Seriously. And now it's just gotten crazy expensive, and they're part of the reason why. $23 billion company edging their way into the middle of everything. Now, let's check back on NVIDIA. Holding on to those gains. Look at that gap. And check this one out, man. You know, is this an A to B, C to D? The run this year alone, I'm not even talking about the crazy run, okay, that started at $100 back in October of 2022. I'm just talking about the run that started this year at about 480. You drive up to the highs of March. You make almost a perfect 382 retracement. You plow above that high. And if that's an A to B, C to D, folks, you're talking about almost a 500-point A to B leg, and that would bring this equity up to about 1267. We're not that far. We're only $250 away. Folks, thanks for tuning in. Stay tuned. We got Basil coming up. He did his show at 8, live programming after that. Have a great Thursday, everybody. We'll see you tomorrow.